Town Bank Mortgage, NMLS number 512138, is an equal housing lender. This podcast is for informational purposes only. And now, the man born with a 5 o'clock shadow and with the NMLS number 2028-201. He is a gentleman. He is a scholar. He is
Tyler Cralle.
Well, yeah, in case you didn't notice, I once again forgot to add the Christmas theme song to the board. So I don't have it. Didn't have time to get it uploaded, but soon. I promise, very soon. Don't have much time. This last full week of 2025. Full work week, I should say, of 2025. But welcome, everyone, to the Monday edition of Wilmington Mortgage. I am the aforementioned host of this podcast, Tyler Cralle, of course, loan officer at Town Bank Mortgage right here in Wilmington, North Carolina. And we break down the big stories that are impacting mortgage rates every single weekday. And we do it in 15 minutes or less, or your money back. And, well, we don't have much to get into today because bond investors were keeping their powder dry ahead of a very busy week. So we mentioned this on Sunday night show. It's a busy week, a lot going on this week. We got 2 jobs reports coming out tomorrow. We got 3 central bank decisions. We got retail sales. We have an inflation report. We got existing home sales. There's a lot going on. Now, obviously, the jobs reports and the inflation report are probably, if anything, is going to move rates. Those are the reports that are going to move rates. And today we got Homebuilder confidence. We are going to talk about that. But we didn't get much else. Not a lot of movement in the markets. Like I said, a lot of bond investors keeping their powder dry ahead of some very big days for data. Once again, 2 jobs reports on Tuesday, an inflation report on Wednesday, and then we have 3 central bank rate decisions on Thursday. That's Bank of England, European Central Bank, and Japan. And once again, I know I mentioned this before, I'm going to say it again, they're all making different decisions. Now, they're all in different rate environments, all, different economies, but it just goes to show you in this sort of post-pandemic world, as we sort of return to normal, just very different economies. So the Bank of Japan is expected to raise rates. European Central Bank is expected to hold rates, and the Bank of England is expected to cut rates. So really kind of highlighting the fact that a lot of differences out there. And it is important to keep an eye on what is happening with monetary policy in other countries because markets are global now. I mean, it's been this way for a while. And so, one of the big stories that we've covered here on this podcast just recently was anytime you see changes to, say, like Japan, for example. So Japan, which for the most part has, I think, a negative real interest rate. So you can essentially get paid to borrow money in Japan, or it's very close to zero. And so a lot of people are borrowing money in Japan, converting the yen to dollars, and then using those dollars to buy treasuries. So you're basically borrowing money for nothing, buying treasuries, making 3.5%, 4%. And so, of course, you're worried about what is happening with the, borrowing rate, interest rate in Japan. And then, of course, the conversion rate. So when you go to currency change swap, you need to make sure that it also makes sense. And so when Japan says, hey, we're going to raise rates, now all of a sudden that carry trade, which has gotten so much attention, you start to see people unwind that carry trade. So the first thing you have to do to unwind the carry trade is sell treasuries. So you see the market get flooded with treasuries. And so that's just an example of sometimes international decisions, central banks making decisions in their own countries that will impact what is happening in our country. So it is important to keep an eye on what is happening in those countries. But like I said, nothing really happened today. Rates fell, I think, about 2 basis points on the 10-year. We had, I think, Mortgage News Daily had the 30-year fixed down about 3 basis points. And so, positive movement, but really just some slight movement ahead of tomorrow's jobs reports, and then inflation, and then central bank decisions. Now, we did get some interesting news about the Federal Reserve and who could potentially be leading the Federal Reserve. So I'm pretty sure I've mentioned on the show, Kevin Hassett going into the Thanksgiving holiday seemed to be the front runner by far for being the next Fed chair. In fact, many outlets were reporting that Kevin Hassett was going to be the name, or was going to be tapped to be the next Federal Reserve chairman. And then all of a sudden, President Trump said, oh, it's a battle between the Kevins, and Kevin Warsh's name was back in the running. And so what happened? CNBC reported that Hassett's candidacy for the Federal Reserve chair was once seen by the market as almost a sure thing, has received some pushback by high-level people who have the ear of President Donald Trump. Steve Leisman and John Malloy, or Milo from CNBC, noted, they were ones that reported on this, noted that Hassett's candidacy received some resistance, with worries growing that the bond market could revolt over time if it sees him as too much in the pocket of Trump. And I mentioned this last week, Kevin Hassett trying to get ahead of these arguments by saying that he wasn't going to make decisions just because Trump wanted him to, and that it was going to be market-based and it was going to be data-based. Because, I mean, Steve Mirren is not doing him any favors on the board of governors. So, of course, he became a Fed governor, and immediately, like his first meeting, like that week when he became a Fed governor, was to push for a 50 basis point cut. This was the first 25 basis point cut, first cut we'd had in almost a year. And he immediately is like, double it, should be 50 basis points. And the next meeting, 50 basis points. And then in this last meeting where you had two people who said we shouldn't be dropping rates at all, he's like, no, 50 basis points once again. And so Steve Mirren is essentially doing the bidding of Trump, which is fine. I mean, Trump's the one that appoints him. And that's his prerogative. He can do that. But it's going to make people go, uh-oh, are we going to put Kevin Hassett on there? Is he going to start demanding a 50 basis point cut and trying to pull the board together to do a bigger cut, even if the data doesn't support it? And so Kevin Hassett, I think, was trying to get ahead of that, but that's clearly the concern from many out there. And you do not... People think we got a problem with the bond market now. I'll tell you right now, if the bond market stops or starts to think that the Fed is no longer doing what's in the best interest of their dual mandate, interest rates and labor market, and is just trying to lower rates to stimulate the economy and lower home prices or lower the cost of owning a home because of lower rates, you're going to see a broken bond market very, very quickly. That would be absolutely catastrophic for rates, because rates would not fall. In fact, the opposite would happen. You would see sort of a disconnect. Sure, the federal funds rate might fall, but once again, mortgage rates and anything else that's sort of pegged to the 10-year would not see that movement. And so, as some people are concerned about Hassett, Kevin Warsh's name is now back in the running. In an interview with the Wall Street Journal from the Oval Office on Friday, President Trump signaled that Warsh may now be the front runner, saying, yes, I think he is. I think you have Kevin and Kevin. They're both, I think the two Kevins are great. And you're really seeing this sort of change in the betting markets. The website Kalshi, how do you say it? Kalshi or Kalish? As many times as I've seen this ad, you would think I would know how to pronounce it. I do not. They had Hassett's odds above 80% earlier this month, started December. And then his chances have now fallen to 41% with Warsh now at 48%. So not a lot of movement today in the bond world, but some possible changes to who could be the next Fed chairman, with Warsh now the front runner. Will he stay the front runner? We will see. We will see. All right. Did want to jump into, before we go, we did get some housing data, Homebuilder confidence, some good news on the housing front. U.S. home builders are feeling better than expected as we head into 2026 with the National Association of Home Builders Wells Fargo Housing Market Index. Boom. Had home builder confidence at an index of 39, rising just 1 point from November. And that was unexpected. Economists were expecting the confidence level to hold. And it was the highest reading since April. So some positive momentum as we go into a new year. Like I said, some positivity there. However, it should be noted we are still well below the break-even point of 50, where 50 is sort of the break-even where you have half the home builders are confident and half are not confident. We're well below that, so more builders are not confident than are. And at 39, we do have some ways to go. Regionally, it was kind of a mixed month. The Midwest surged 7 points to 47. West rose 2 points to 36. Meanwhile, the Northeast fell 4 points to 41, and the South declined 2 points to 35. It's crazy. The South is the worst for home builder confidence. That's just so crazy to me because the South has always been just so high on that list, and this is just sort of a recent development in 2025. The South has now fallen to the worst region. Man, worse than even the West. That's crazy. Chief economist for the National Association of Home Builders, Robert Dietz, said builders are growing more optimistic about what is ahead. So not only are we seeing home builder confidence kind of rise, the optimism index sort of looking ahead is also pretty positive. Dietz said, quote, in a positive sign for the markets, builders report that future sales expectations have been above the key break-even level for the past 3 months, and the recent easing of monetary policy should help builder loan conditions at the start of 2026. So builders are feeling a little bit better as we enter a new year. Rates are at a lower level than where we were when we started the year. And so home builder confidence is rising, but we do have a ways to go. We do have some ways to go, but it is rising, ending as we end 2025. So I'll take it. I'll take any positive news on the home builder front. Like I said, all year it was under 50. Got to go back into, what was it, April 24 before it was above 50. That's crazy. Because, I mean, wasn't that long ago, the pandemic boom that we saw just home builder confidence, I think, at the highest level ever, right after COVID. And now, not even above 50 for the whole year. All right, we got to go. Don't forget, big data out tomorrow. 2 non-farm payrolls we're going to be getting. We'll also be getting retail sales. But if anything moves markets, I mean, I guess we could get, if we got a really bad retail number, that could signal. Because there was a report today from CNBC. 41% of Americans plan to spend less this year than they did the year before. I think that was up about 5 or 6%. 42% said they will spend about the same, and just 16% saying they will spend more. So there's already concern about the consumer out there if we were to get a bad retail sales number. Once again, that would be from October. That would really kind of give us a sign that things are not great with the American consumer. So we'll see what happens. All right, you guys enjoy the rest of your Monday. We'll be back here Tuesday afternoon for another edition of Wilmington Mortgage. And remember, as always, do not wait to buy real estate. You buy real estate and wait.